right? So the longer it goes, the more credible the next prediction becomes, right? So Bitcoin at 60,000 was some people would dismiss that 2 years ago, but here we are, right? So then when you're at 60,000, 200,000 sounds less crazy than when you were at 4,000, right? So as it kind of takes market share, and then you can assess the information at the time, and then you constantly update your model for how big Bitcoin could become. And so I generally start with conservative, kind of total addressable market, but then as it meets certain frameworks, it becomes easier to expand your base case for how big it could get. And as long as you start with the idea that actually you can have some upper bounds for how big it can get. And so that's the approach I've been doing. And then two, I would point out that I think one of the problems especially the past 10 years, kind of the post GFC environment, a little over 10 years, is that, for lack of good money, people are clearly monetizing other things, right? So in the US, we have the highest equity valuations as a percentage of household assets we've ever had. And it goes back to the whole, there is no alternative, TINA, right? So they're like, well, I can't hold cash and bonds, and so I got to buy equities, even though I'm looking at, say, the CAPE ratio or the market cap to GDP ratio or whatever your preferred valuation metric is. And you're saying, well, I know they're expensive, but I have to hold them anyway. And so in many cases, we've essentially monetized the S&P 500 as a store of value rather than thinking of it as an investment. It's like we got to just shove money in there that we don't know what else to do with, because we can't just leave it in T-bills. So the same thing's true for prime real estate. So if you're a billionaire and you're trying to figure out how to preserve your wealth, you're like, well, I mean, I don't know how to value this beachfront property. It seems expensive. It doubled over the past 2 years, but I'd still rather own this than T-bills. And so the argument among some of the really bullish Bitcoiners is that if you do continue to reach certain thresholds and Bitcoin just keeps going, it becomes, if you have this kind of global hard money, it becomes an alternative that people have monetized these other assets. They've essentially added a monetary premium that is above their utility value. And so we're, in that world, let's say Bitcoin gets big enough, it becomes worth, tens of trillions of dollars, which is still small compared to, say, global money supply or global asset value. But if it starts to reach those types of market caps, you could argue that things like certain types of real estate, certain types of stocks, fine art, that things that people have put an additional monetary premium in for lack of good money might get drawn out and into Bitcoin, and that those things return to a more healthy valuation where they're mostly held for their utility value, and that they have more reasonable valuations, therefore they have higher returns for taking on risk, whereas Bitcoin becomes like the conservative gold-like hard money asset. But that's, of course, right now we're still at roughly $1 trillion market cap, so we're still kind of premature to that type of assessment, but that would be the argument for people that have a very optimistic look into Bitcoin's maybe 20-year future. Basically, the earlier it is early, basically you get higher returns in exchange for higher volatility and higher tail risk of the whole thing not working out. I mean, it had to go through these big tests. It had the Mt. Gox thing. It had the block size war. It's had these challenges. It had half of its mining just move, within 1 year across the world. It has these crazy things happen to it. And so the more tests it goes through, the bigger it gets, and then the lower volatility it gets, the more widely held it is, the more normalized it is to hold a higher percentage of your assets in it. So there's that. And if you step back and kind of look at this process of demonetization of other assets, if that plays out, or at least in some direction, if it directionally plays out to some degree, I think it would have some pros and cons. I mean, any transition like that is going to be challenging. But the argument, for example, like the house price to income ratio, right? So we've monetized houses for lack of other things to monetize. As interest rates came down, is basically has been easier to justify those high prices, and that's really good for people that have owned a house the whole time. But it's harder for new entrants into the housing market. It makes it unaffordable for Gen Z and millennials in some cases to buy a home, and if they do, they have to go in a ton of debt to do it.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information, and it helps us spread that message. Sharing is caring. And now, let's continue.
Like my father was like he was pretty old when I was born, and so he bought his first house back in like the late 50s, and it was on like a police officer's salary. He just bought it when he was like 22. And it was a different time back then. You just buy a house on a middle income salary. And so say the argument from some Bitcoiners that would view as a good thing that the monetary premium sucked out of these things is that things that should be more affordable for the utility value would return to that in a more kind of sound money environment, let's say. Whereas you'd still have investments in things that are providing long-term value. But of course, during a transition, if you suck monetary premium out of a house, you could also suck a monetary premium out of something that is enabling new technology, new productivity. And so any transition like that is going to be a challenge. But I think if that hypothetical scenario were to play out, I think it would come with pros and cons. But I think as the dust settles, that should be a healthier environment. If you go back in history, people should be able to essentially save money in something that's not speculative in order to build a retirement. And so they shouldn't have to have like 100% of their net worth in equities. They should have something that they can save in that's somewhat reliable. And right now, there's just not a lot of good alternatives for that, including Bitcoin at this current size, because for a lot of people it's too volatile. But in a world where there is some sort of a something that's acknowledged as money that's pretty stable, that gives that people can have a larger share of the net worth in it, and then be more selective with the types of investments that they do. Yeah, I think it's good for people to basically address their own risk tolerance and specifically volatility tolerance. And so someone who's put 1,000 hours of research into Bitcoin obviously can handle generally a larger position than someone who's just trying it out and just kind of learned about it last week. So there's that kind of if you were to chart like knowledge and conviction versus allocation, there's going to be a change there. And going back to the whole thing, if we say, okay, if Bitcoin's going to have a very high, say, double-digit CAGR over the next decade, some people ask, why not just put everything into it? I've had people ask me that question, and I said, ultimately, it's because of tail risks, and it's because of human nature and volatility. And so I have a large allocation into Bitcoin, partially because I put a decent chunk into it, and also because it appreciated, fortunately, and it just didn't rebalance it, right? So it's a large chunk. But it's still small enough that when this summer, for example, Bitcoin more than got cut in half, I was like, it's not like so when people put their entire net worth into something like that, that's where they lose sleep, right? So people I think there's a range of allocations that make sense, but it comes down to their individual temperament, comes down to their knowledge on it, their conviction on it, and what kind of lifestyle they have, what their obligations are, as we go forward.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof. to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.